Is the real estate market finally cooling off? Find out right now. Hey, if you're a homeowner and investor or interested in buying property here in South Louisiana, we've got all the data that you need. Hi, I'm Jim Cady with Cady Real Estate, and this is your market update. So far this year, Lafayette has experienced an 18% increase in sales year over year. That's 53 more sales in January compared to this same time last year. As you can see in this next chart, when looking at January sales going all the way back to 2012, Lafayette Parish reported significantly more sales in January 2022 than any other January in the last decade, showing signs that demand is still climbing. Now, this trend continues into the dollar volume sold, where Lafayette Parish reported a 28% increase, breaking over $90 million in volume. That's an additional $20 million in volume sold in January year over year. The big news this year so far is that Lafayette Parish reported 6% fewer new listings entering the market in the first quarter of 2022 versus 2021. And March alone reported 5% fewer new listings entering the market compared to March of 2021. With demand still strong and less new listings coming into the market, the overall supply is suffering. Not only did we list fewer homes when compared to last year, we listed fewer homes compared to the last 4 years. The first quarter of 2022 is reporting a 26% decrease in overall listings available compared to the first quarter of 2021. This is massive and is pointing to strong demand and lack of new supply. We continue to see this trend hold for March's numbers as well, with 5% fewer new listings in March of 2022 versus 2021, putting even more pressure on our inventory. So, although we reported 9% fewer sales in March, we saw 6% fewer homes come onto the market, contributing to 26% decrease in the overall actives available. So, what I'm seeing is slightly fewer new listings coming onto the market compared to last year, but the demand is absorbing the inventory faster than the homes are becoming available. With demand high and supply low, prices will continue to increase. This lack of supply is influencing our days on the market, and days on market for listings have decreased from 56 days in quarter one of 2021 to an average of 29 days for the first quarter of 2022. That's a 48% decrease in days on the market. We can conclude that we need more new listings to hit the market to satisfy the demand. Until we have more inventory, our prices will continue to rise. Overall, it's a seller's market and it's still a great time to sell. The big news right now is rising mortgage rates. So let's take a look at what mortgage rates have been doing so far this year. Interest rates started at 3.11% in January, and at the end of March, we were already at 4.67 and climbing. So why are interest rates rising? Inflation is driving the increase in the mortgage rates, and the experts are predicting that rates are going to continue to rise, but they're likely going to rise at a more moderate pace. So the big question people have been asking is, what's going to happen to home prices as interest rates rise? Well, most people think as rates go up, prices go down. But here's some data from Freddie Mac. What you're looking at here is the impact of rising rates on home prices when there is a rise by more than 1 percentage point. Going back to 1993, you can see the data shows on average an 8% increase in home values when interest rates increase more than 1%. Overall, you see that rising interest rates do not have a negative impact on home prices over the last 4 decades. But what will happen to our sales when you have a 1% increase in interest rates? When we add sales data to this chart, we can see an average decrease of 5% in sales overall. As rates rise, that tends to reduce buyer activity and price some buyers out of the market. We are in a fundamentally different environment than what we've had in the past. When inventory is low, home prices are always going to continue to rise. Inventory is still at record lows, and that's going to be the driving force for the rising home prices. So although we expect interest rates to continue to rise, we expect them to rise at a slower pace than what we've seen in the last few weeks. One Freddie Mac analyst said, history suggests that when rates rise, there's an initial bump in home prices as many move quickly to buy a home before rates increase any further. But after that period, home prices slow. The Freddie Mac analysis shows that a 1% increase in mortgage rates results in home price appreciation that is 4 percentage points lower. For instance, a 1% increase in mortgage rates would change home price growth from 11% to 7%. The mortgage rate increase will slow some of the frenzy, but we're not talking about depreciation. We're talking about softening and de-acceleration, which will slow some of the buyers as we move forward in the housing market. This current lack of inventory is contributing to a seller's market. The average price for the first quarter of 2022 has increased from $251,000 to $271,000. That's an 8% increase year over year. Let's take a look at this next graph from the home price forecast for 2022. I think this gives you a really good picture as to where home prices will be according to the experts. Here you can see the average of the 7 experts predicting home values to increase 6.7% in 2022. So, as you can see, all signs are pointing to prices continuing to rise, but at a slower pace. Lafayette Parish has experienced a 1.4% decrease in pending sales in the first quarter of the year. That's only 19 total pendings less than last year, with March alone reporting 62 less pendings year over year. So, although we had a record-breaking first quarter in closings and volume, the pendings seem to have cooled off. This means we should expect the same or slightly fewer closings in the next 30 to 60 days compared to last year. However, when we are looking at the number of pendings for March going back to 2012, you can see we are below last year, but we're well above the average number of pendings for any other March. And although pendings have cooled, demand continues to hold strong. In fact, the MLS reported that over 23% of homes sold in February were above list price. This is more than double the average over the last decade, indicating a very strong demand for housing and a short supply of homes for sale. And with this inventory at an all-time low, could the low pendings just be a result of the low inventory and supply? Which brings up these questions. Would we have placed more homes in pending status in March if there were more homes available to sell? I can testify that my team, they're working very hard to find more listings for our clients. If there were more homes on the market today, I'm certain that we would have reported more pending sales in March 2022 versus 2021. So it seems like we're dealing with a supply shortage more than a demand shortage, but we're gonna have to see how this is gonna play out over the next 90 days. As always, we like to keep an eye on what's happening with foreclosures. The first quarter of 2022 reported a total of 8 foreclosure sales in the MLS. This is not surprising since home prices have increased 10% over the last 15 months. As home values go up, foreclosures go down. I hope you found this information valuable. If you would like to receive these monthly market reports, or if you would like a free market analysis on your property, I would love to help. Stay tuned for next week when I'm going to break down April's sales and volume. I'm Jim Cady with Cady Real Estate, and thank you for watching.